The gold market ended lower for the third consecutive week, while it seems to be losing ground so far in the current. With a rather interesting week ahead and gold's highly unpredictable nature, we turn our attention to the present moment. This report can be used as a gold trading manual, as it will combine fundamental and technical analysis. My name is Angelos Zittis, and this is the IronFX Gold Report for the 10th of May. One way to trade the gold market can be exclusively during the important economic releases. The most important release from our point of view comes on the 11th of May with the US inflation data for April. Rising inflation has been a great headache for most economies around the world, but especially in the US, with the matter being of great importance to the Federal Reserve. At the moment, the forecasts are for all the monthly, yearly, and core rates to tick down compared to the previous month, yet any surprise upon release can have a stronger impact on the gold market. Inflation data releases have traditionally been used as a target for gold traders, and this event can produce significant volatility for gold prices. On a separate note, on Thursday the 12th of May we get the weekly US initial jobless claims, and on Friday the 13th we get the interesting preliminary University of Michigan consumer sentiment figure for May. Finally, traders should note Tuesday the 17th of May with the key retail sales and the industrial production rates both for April. As inflation in the US reached record high levels in the past months, the FOMC rushed to impose rate hikes just like the one of 50 basis points announced in the past week. On the day, gold prices moved higher while the greenback was on the back foot, confirming the adverse relationship between them may still be in place. The gold market may be caught in between economic and geopolitical tensions, which are considered by many to remain with us for the near future. A global rate hike environment may not be so favorable for the gold market, while on the other hand, agriculture and energy commodity prices have remained higher recently, indicating investors may be gravitating towards those asset classes which are driven by the Russian war in Ukraine and supply bottleneck matters that have persisted as a result of the pandemic. Finally, a gold trader should keep in mind that the market may be prone to abrupt and emotional price swings as a result of speculation. In our opinion, trading gold should be accompanied by swift and definite decision-making, while a predetermined exit point must be considered prior to entering the market. We move now to our technical analysis. Please note this is gold's 4-hour chart. Gold is currently trading between our R1 1870 resistance level and our S1 1845 support level. In the past days, gold traded higher, breaking above the R2 1890 line and even surpassed the 1900 round number barrier, but eventually returned to lower grounds. However, for an ultimate bullish scenario, we would consider the R3 1920 resistance barrier as a key indicator for bullish appetite. In the opposite direction, a breach below the S1 1845 support could signal more bearish interest to come, making the S2 1820 support a probable target. In the scenario of a notable sell-off, we could see the S3 1790 being engaged. Very notably, the RSI indicator had made a move towards the 30 line but rebounded and is currently moving across the 43 level, suggesting some stabilization in the short term. Yet in our view, gold continues to trade in a downward trend line, which is highlighted with the orange descending line on our chart. A possible move above the orange line could signal a breach of the current downward trend line and that a sideways motion may be prevailing. Once again, in order for the trend to turn bullish, our personal view would be for the R3 1920 line to be tested.